Just a quick introduction to the Sure to Close
Okay.
program that we offer. This is the Sure to Close is to help with all these houses have multiple offers on it. You got cash, you got people putting a ton down, but this will help compete with those cash offers and put your offer at the top. So let's get into the Sure to Close and how it works. So the Sure to Close program, we process it and we underwrite it as a to be determined property. Earnest money guarantee up to 10,000 strengthens the offer to compete with cash offers. So the file eligibility, the programs that we can use, someone has to be going conventional or FHA, has to be a fixed rate. We can do the home ready, home possible. We cannot do down payment assistance with this. The minimum credit score that the borrowers have to have is 680 for conventional and then 640 for FHA. The max debt to income ratio just depends on DU or LP getting the approved eligible. So conventional, as long as we're at 50% or below, we should be fine for the debt to income ratio. For assets, borrowers' own funds, we will allow gifts, documented source of funds required. Occupancy, it must be a primary residence. And for property types, single family and townhomes. We are not doing condos right now for this, just because there's more that goes into the condos. But that could change down the line. Couple program notes. We can use, if locked, using lock and shop. We qualify with that lock. And what lock and shop is we can lock in at pre-approval. So a borrower, we can separate lock and shop and Sure to Close. So if someone just gets pre-approved, we don't do the Sure to Close. They can lock in an interest rate without a contract. So how that one works is we can lock it for 45, 60, 75, 90. As long as they go to contract with 30 days left remaining on the lock, we're good. So we can do lock and shop with Sure to Close. If we don't lock it, we have to qualify at a rate 1% higher than the market rate. So if rates were at 6%, we have to use 7% when we send the file to underwriting. And then must get approved eligible with the increased rate. The program is good for 30 days. So must provide lender with an accepted purchase agreement with the specific subject property within 30 days of the effective date of the agreement. And we'll take a look at the agreement. If unable to provide the contract within 30 days, this period may be renewed or extended, subject to receipt of updating documents, pay stubs, bank statements, and then we would have to send it back to underwriting. So this is what the borrower will receive once we go through underwriting. I would say from the start of getting them filling out the application and getting all of their documentation, it should take about a week to get through underwriting. So once we get the approval for underwriting, this is what they will send, and then we'll send this to the borrower to sign. It just has the file number. Number 3 is the effective date. That's going to be the effective date. So 30 days after that, that's when it expires. The pre-approval request, it just states applicant has submitted the attached loan application along with supporting documentation and requested a fully underwritten pre-approval based on the information and documentation submitted. It goes through the pre-approved terms, maximum purchase price, maximum loan amount, max loan to value, fixed rate loan, what loan type, loan term, property type. And then the conditions will be purchase agreement, Appraisal. Contract must specify a closing date within 60 days of date of acceptance. Applicants must apply for a mortgage loan from lender on property corresponding with the pre-approved terms. And then this goes more into number 8 is if all the above conditions are met and earnest money is forfeited by applicant due to lender's failure to provide financing consistent with the pre-approved terms, lender will reimburse applicants an amount equal to the lesser of $10,000 or the actual amount of earnest money forfeited. So this agreement shall be null and void if loan application is withdrawn by applicant. Reasonable supporting documentation required by investor guidelines cannot be provided by the applicant, including but not limited to documentation of identity, income, employment, assets, liabilities, or gift funds for down payment. So this is what you would then attach when you're making an offer. It shows them there's really no financing contingency because we've already gone through it. So once someone goes to contract, all we will have to do is order the appraisal, get title. So it will be a really quick process. We'll just be waiting for the appraisal to come back. And then we send it back into underwriting for the clear to close. And then sure to close flyer. This is what we can send out to borrowers. We can co-brand this. You can send it out to people also. Sure to close guarantee allows you to increase your offer power and protects your earnest money. Underwriting review, and then compete with cash offers. So this is, and like I said, it will probably take 7 days. Like typically pre-approvals will get done in 24 hours. This will take a little bit longer just because we're going through underwriting. And then that's any questions on it.
Tony, I have a question or just a comment. It appears that unlike a pre-approval where we're basically just verifying income and pulling a credit report, here we're going to the next step, and that is we're verifying all the underlying assets also that we wouldn't normally do in a pre-approval. So credit is being pulled, income is being verified, and assets are being verified through a human being. Unlike on a pre-approval where it just gets run through Fannie Mae or Freddie Mac's computer, it's still being run through Fannie Mae or Freddie Mac's computer, but the file with all the asset verification documentation goes to underwriting, and within 7 days, we're getting back an agreement from underwriting that says we guarantee you're going to close, we guarantee your earnest money up to $10,000, and now the realtor can make an all cash offer, doesn't have to check any of the financing contingency boxes because the customer in essence has a guarantee to close and their earnest money is protected up to $10,000.
Yeah, correct. Yep. We're just taking the next step. We're starting the process already, like if we have a contract.
And it doesn't affect their rate at all, does it? I mean, whatever rate that they're entitled to, whether they do sure to close or not, they're still getting that interest rate. It's a matter
we can lock it in at the time we do this, or we let it float until they go to contract. So it's up to them on what they want to do.
And this is all because there's low inventory out there. And when good property comes to market, you're seeing it's a seller's market still. The sellers are receiving multiple offers, and rather than letting your customer be a loser, you're converting them with this sure to close. What are they doing? They're waiting, instead of getting pre-approval in 24 hours, they're getting a sure to close within 7 days, and now they're almost guaranteed to be a serious buyer, someone who's making a serious offer. And the realtor can feel a lot more confident about making this offer that the customer, is going to have a very good chance of being the winner of that offer to purchase a piece of property.
Yeah, it'll be a quick close too.
I just don't know why people, I don't know why people won't use this in the marketplace, especially when it's a seller's market. There's
Yeah.
nothing detrimental other than they're waiting a few extra days for it to come out of underwriting, and then they get an agreement that's signed by the borrower. And I as the customer, I'm glad to hear that, somebody's guaranteeing my earnest money up to $10,000.
Mm-hmm. Yeah. I like that too.
Any other questions? Just unmute yourself if you do, or put a question in the chat box. Oh, I see your chat box has got a couple of comments in there. Robert Ellis, doing well, my man. Getting the day started. Have to be in the field in a bit to meet a client, but could use some quick training. All right, well,
all right.
This is being recorded. So, and the important thing too that you mentioned was that flyer on the Sure to Close flyer, that can be co-branded with the realtor's picture, with the realtor's contact information. They could be carrying that around in their briefcase, and whenever they're talking to clients, bring the flyer out and give it to them and say, we can make an offer not subject to financing. We can make it look like a cash offer. Let's get the process started because it's going to take up to 7 days to get you that Sure to Close certificate. But I mean, I would think that, again, if I was a realtor, I would want an advertising, a marketing piece, a Sure to Close flyer in my briefcase that I could hand out to clients as we're thinking about making an offer.
Mm-hmm.
Cool. So again, if you're interested in getting a Sure to Close flyer with your picture and contact information on there, co-branded with Tanya or Tony, just, you see them on the screen, call either one of them, email them, and get that flyer going.
Yeah, and we'll send out emails too. And then you could just respond to the email if you want a co-branded flyer, or if you got any questions, just give us a call. Any other questions?
Yes. So just so my understanding, I do want to make sure I got this right. The Sure to Close program will guarantee $10,000 for the buyer, but it will be paid for through First Centennial.
If for some reason,
if the earnest money's forfeited. So if they don't close for a financing reason.
Okay, that makes sense.
They're not getting, it's not like they're getting 10,000, like a down payment assistance, 10,000. That's just, and it's 10,000 or whatever's higher, whatever they put for earnest money, and the max is 10,000.
Okay, that makes sense.
Yeah. And hopefully it never comes to that, which it shouldn't.
I hope not.
We're underwriting them up front.
So the 10,000 will basically guarantee if anything falls through with financing.
Mm-hmm. Yep.
Okay.
Yeah. For example, First Centennial was all of a sudden at the last minute say, well, we're not, we're declining this loan. We're not going to finance the purchase. Well,
yeah. What
theoretically, the seller can keep the buyer's earnest money, right? Because he's now backing out of it, and he really didn't have a financing contingency. So usually the seller's attorney is going to say, I'm sorry, we're keeping the earnest money. Well, the buyer would not. Yeah, the seller's going to keep the earnest money, but First Centennial is going to have to pay the buyer. If he had put up, let's say, $3,000, $4,000 in earnest money, First Centennial is going to have to pay that $3,000 or $4,000 that he just lost to the seller.
Yeah.
So the person that's going to be out money is going to be First Centennial. The seller is going to keep the earnest money because he didn't go forward with the purchase. The buyer is going to get reimbursed by First Centennial for the loss of the earnest money. And yeah, First Centennial would be out the money. But that's why they're underwriting the file. They're underwriting credit, income, and assets within that 6 to 7 days. And that's why they're coming out with a guarantee to close. Now, if for some reason the buyers, say the buyer declared bankruptcy between the time you made an offer and the time of closing. Well, First Centennial won't fund the deal then, right? But they're also not, it also says in small print, if your financial condition changes between the time you get a sure to close certificate and the date of closing, First Centennial does not have to guarantee your earnest money.
Correct, because now that's their fault. That's their fault, correct?
Absolutely, Robert.
Yep.
I love it. I love it.
I mean, if I was a realtor, I'd be doing most of my clients on sure to close so that I know that, that they look like a cash offer, to most sellers. The seller's not, let's see, I got a cash offer from Robert's client, and then Glenn Marino's client is here with 95% financing contingency. Which one should I take?
Yeah.
I think I would take Robert's all cash offer because he's got a guarantee to close certificate on top of the offer.
I love this. And with this program, we cannot stack down payment assistance programs with it, correct?
No.
Okay. Okay.
No, just because there's more that goes into the down payment assistance. So it's strictly just conventional and FHA, and then only single family and townhomes right now.
Okay.
No condos.
That's perfect. They still give us some wiggle room with seller credit. So.
Oh
Mhm.
yeah, that
Oh yeah,
absolutely.
that would, yeah. Because then you'd say, hey, we're through underwriting. They obviously don't need the seller credit because we're not going to be using a seller credit during the underwriting process. You can say that's what they're looking for. Because they obviously qualify without a seller credit. So yeah, you would have probably more negotiating power with this.
I like this idea.
If I was a realtor, I'd be doing most of my deals on sure to close. I'd be telling my clients, go use FCM Express, get your application in electronically ASAP, and get yourself in and out of underwriting, get that certificate, sign it up, and let's go make an offer. And you're going to be at the top. You're going to be at the top of the list. That the sellers are going to consider. So as realtors, you're going to look great in the eyes of your buyers, that you're able to push them to the top of the list and make their offers look really good. So you can do it without sure to close, or you can shine like a star and do it with a sure to close.